Thank you for your time, Olayemi. And let's look at sentiments we're looking at in the market now. The third day of losses for the markets. Yeah, what's your take on what's playing out?
So thank you for having me. The equities market has kind of been a bit tepid since the start of the week. If you compare what we've seen in last week, also in November, and compare vis-a-vis what has played out in this week, what you would see is that the market is quite quiet compared to November and last week. Of course, from start of the week, we've not seen so much of gains. On Monday, the market closed down negative, on Tuesday as well, and today it's not looking any different as well. Maybe it's some factors such as the recent announcement from the CBN as regards selling out, securitizing the excess CRL has brought a major uncertainty into the market and has called for caution from investors who would want to see how that pans out. Bearing in mind that before now, what has driven the equities market, especially in November, has been system liquidity as well as the unattractiveness in the fixed income space. And so I think that's largely what accounted for sort of the quiet sessions we've seen. If you look at the volume and value traded in the week thus far compared to what we saw last week, it's quite lower. That in the week says a lot about caution from investors to kind of see how it plays out. Should they see some sort of attractive rates better than what is currently obtainable in the fixed income space? Maybe the question would be that why do I want to take more profit? Why do I want to take more risk on the equities market? And so I think that's the reason why we've seen so much of caution currently from the start of the week compared to what we've seen in recent times, Q3 down to November.
All right, but let's look at the sentiment around the sectors. We're seeing a major oil and gas player in the laggards table today, Ardova PLC, and we've seen the oil and gas sector down about 16% year to date as one of the worst performers in there. How are investors playing the oil and gas stocks?
So of course, if you look at what has played out in the oil and gas space, it all boils down to how to what extent COVID impacted on prices, and with a recovery in mind, seeing that in recent times we saw oil prices actually increased significantly. I think it's from the subdued early 40 levels down to up to about 48 levels. You see that week to date, as of yesterday, the oil and gas sector was actually in positive. But bearing in mind what has played out over the course of the year, it's still quite down year to date. Maybe sentiments around the oil and gas space starts to mirror expectations regards crude oil prices. And that's why we started to see some sort of positive sentiments in the oil and gas space week to date, which may likely continue if we see oil price continues to strengthen going forward. For the bullish space, I think it's a case of caution. In the short term, there are no respite for that space, bearing in mind that consumer spending is subdued. Maybe in the longer term, when the economy balances and disposable income increases, we see more from discretionary spending, and that should hold for the space. But for the interim, it's probably what a lot of investors do want to are playing.
All right, but on the flip side, we're seeing the banks post gains today. Zenith Bank, FCMB, Stanbic on that list today. What's the sentiment for the banking stocks as well?
So again, if you look at what has happened in the banking space, you kind of see in December a bit of profit taking on those names. Compared to, you saw strong gains on those names in Q3 and November. You saw that the biggest movers of the downward trend we've seen over the past 3 days has been more of the banking names like Zenith, like Access, like GT Bank. But again, uncertainty as regarding the securitized excess CRL, if it's actually issued at a better rate, it's actually good for bank earnings. So I would think that it's more speculative right now, with no much of certainty as regards what to expect. The buys we saw in those names today could be a case of investors speculating as to what the outcome would be if it's been implemented. Again, it's bearing in mind the upcoming the PME auctions and the upcoming bond auctions, which should give us sort of direction as to what to expect. So even without so much of clarity, it gives a signal as to what the Apex Bank wants to do. So it could be that investors are speculating on those things, positioning ahead of what the outcome will actually pan out.
Definitely quite a lot with what the investors are waiting on, that special bills from the central bank. But let's look at one sector that is doing quite well already this year, and I think one of the best performers on the local bourse here is the Industrial Goods Index. What's the sentiment in that space, and what's the outlook for competition in that going forward?
The cement space kind of surprised the market. If you look at Q2 performance, even when COVID was at its peak, we didn't really see so much of a contraction as expected. And so it in a way speaks to the resilience in that space. And so in Q3, expectations are that performance may actually surpass, of course, expectedly should surpass what we saw in Q2. And so that in a way has driven sentiment, coupled with the fact that if you look at the cement space, well, the outlook speaks positive, given the infrastructural deficits we have in the country. The long-term prospect is very good. So if equities is a long-term investment, it's a place to play in. I think with regards to competition, competition required, first we expected to intensify. I think it's a case of how much they can ramp up on volume rather than price increases. A lot of them will be playing on margins just to be able to sell at a more affordable price to gain market share. Especially now that it seems as if the economy is a bit weakened, purchasing power-wise because of the recession. We expect that competition will intensify. However, going forward into the year, we expect better performance from cement space on the back of CapEx. CapEx spending for 2021 looks quite impressive. If we see impressive implementation, it's good for the cement space, and that again is positive for the long-term earnings, at the medium to long-term earnings.